All right. Good morning. Good morning. What we're going to do this morning is we're going to talk about our entries and why we need to make sure and be patient about really good entries with this. Okay. Um, so that we have the ability to have those, 25, 30 pip stop losses. Right. So what we're looking for, and this 238 plays a big part in how we set our stops. Okay. We have essentially three different ways to set our stop loss. And that's how we figure out our risk to reward, right? We first need to know how much our risk is, okay? Right. And the first thing we're going to do to identify that risk is we're going to say, if I'm going to get into this trade, this next call that's coming, say we're looking for a signal, right? Say we're looking for a signal, right? It's already on a downtrend. We're waiting for this sell to come, right? If we are waiting for a signal, right, this is this anticipation you get when you start to get really, moving forward with this indicator, the anticipation of this signal is going to come. You're like, okay, the EMAs are getting really close to each other. They're going to get ready to cross. Now, if I entered here, where would I put my stop? Okay. Right. Let's just go over to one. Give us a little better. Right. Because that's really where we're trading. Okay. So you can see we were on a downtrend. There's a sell here in a blue candle, waited out the pullback. There were some pips there, pushed all the way back up, red star, right to that 238, rejected it. You're like, okay, this cross is going to come. If I enter this, there's three places. Okay. There's three places that we can put our stop. Okay. Right. The first will be back to structure. Right. So if this signal, if we're waiting for this signal, right, the first place we could put our stop, oops, it's on the path tool. Okay. The first place we put our stop would be back to structure. Right. Now, how big of a stop would that be? Yeah. We're going short position. Right. We're looking at about a 30 pip stop loss. Now, of course, we talked about this 230 yesterday, or it could be just on the other side of it, just to help us, right? We're talking about, essentially maybe a 40 pip stop loss. Now, if we're using that like kind of like 40 to 50 range area, then we should lower our lot slightly just because of our risk reward, right? We don't want to be risking 5% on one of those trades. So there's three positions here, and I'm going to make this a little bit smaller and just move it over to the side. Oh, hang on, so I have to leave it there. Okay, so there's three. What's even better about this trade is that there are three places that we can put our stop loss, and all three of them are in roughly the same area. Okay, so we'd be waiting for this sell signal to be on trend, right? Because that's what our trend was. Our trend was down, right? So we come here, we have previous structure, we have the 238, and we have a resistance level. So as you can see, you have all three places to set your stop, right? We have the 238 and the resistance level right on each other as well. So three places to set our stop loss, okay? One, previous, right? Previous structure. Okay. Let's put chart structure. Two, support or resistance levels. Okay. Three, EMAs. So not just the 238, but you have your EMAs. So either, on the other side of the EMA. So this one, if you put your You want to be the best possible stop loss for your EMAs is going to be on the other side of all three of them. As you can see, right? You have your red, your blue, and your 238. Those are going to be three places that can reject this chart, right? Three places that can reject and then start to head back, right? Those are going to be three indications. If it breaks all three of those, then pretty good chance it wants to keep going the other direction and you want to get out of the trade. Okay. Now, sometimes when you enter a pullback, you're not going to get the opportunity, right, to enter, right? You're not going to get the opportunity. Like if you're entering a pullback, and this, essentially was a bit of a pullback, even though you got a signal change. Sometimes you won't get the opportunity to have your stop on the other side of all three, right? Sometimes, if you're enter a pullback here, the 238 is, 100 pips away because it's on such a strong downtrend, right? So it's best to be on the other side of all the three EMAs, but it has to at least be on the other side of the 20 and the 50. Okay. Okay. So let's just make that a little smaller so we can all see it. Okay, so as you can see, right, okay, so as you can see in this trade, we have the ability to have all three of those. I mean, the stop, I'm tighter than usually 40 pips, but if you want 40 pips here, your risk to reward would be off a little bit because you need to get to 80 to have your 1 to 2, right? So, okay, on it. Yeah, always based. Always. We trade in the one. We're scalpers. Trade in the one. So the one thing I would do here is if I risk to reward is if I am looking for 50 pips. Okay. If I am looking for 50 pips, then I have to get myself into a position or start my trade in a bit of a different position on my stop. So as soon as this thing pushed up and bounced off here, that's when I could have moved my stop and make sure that my risk reward is in a proper position, right? Because once we see that this wants to bounce off these EMAs here and then follow and continue down in that position, right? And also when we're here, this green star would popped right there as it broke this support line, right? So we would have wanted to take our stop, which would originally been here, right? So the first thing we want to do as soon as it kind of started to break is the first thing we would do is be patient, right? And take it down to 25 pips. Now, your risk reward is where it's supposed to be. And then once it broke this support and started to fall, that's when you would have taken this thing, protected it here, and let it run to your TP. Okay. I would not have. Okay. So that's how we set our stop, and that's how we start our risk to reward. Okay. That's just not being patient. Okay. I would, because it's on trend and ready to go. Let's make sure we get our risk to reward where we want it to be as soon as possible. Right. So the first thing I would have done was when I entered that, even if you did a 25 pip stop loss, it still works, right? This 25 pip stop still works in here. Right. And it is on the other side of those two EMAs. It's a bit tight because of where the 238 is. Okay. Okay. So it's a bit, this being on the other side of the 238 is the best position for that stop, but it still worked out here at 1 to 2. Right? Even if you had your stop loss at 25 pips, this is still a really good trade. Right? And we should be moving our stop when this stuff happens, right? If you started here right? Then you should move this when you get that, there's that first opportunity, right? Starts to bounce up here, then turns and starts to head back on that other direction. That's when you take your stop and just get it close, make sure you're at that 1 to 2. And then once it came down here and broke this support line, that's when you take this thing down and protect it, let it run to your 50. Okay. All right, well, let's go find another one here. Okay. So placing our stops, you can see, let's go take a look at this one, because this one would be a much tougher trade and very well could have been a stop, right? Okay, so we say we entered this trade here, broke through at 238. Remember, we're waiting for this to kind of push back to that 238 before we enter, right? We get into this short position. And actually, this would have been very, very, very tight, but this does actually play out at 2 for 1. But you can see how close that is. You probably would have got a break even, because once it broke down here, you probably, once it broke down here, only 10 pips, probably shouldn't have moved that. But you can see this still would have worked out if you would have kept your risk reward proper, right? If you would have set your stop loss in a previous structure, might have been a little bit too big, but this stop loss is on the other side of all 3 of these EMAs. Right, at 25 pips, you went back to previous structure, which is another opportunity. This one does go your 30 to 80, right? If you manage it properly, right? So you want to set your risk for reward to what you're setting your stop at. Now, of course, this pushed back up here and then broke back below. And once it broke back below, you can take your stop, right? Once it broke back below those EMAs, move it down a little bit tighter. Once it broke back down below the support, then you could have moved this thing all the way down here. You see, it might have got broken out there at 10 pips, but it would have just missed it. And then headed down to your TP. Okay. Just remember, when it wants to break these supports, it does want to push back before heading down. So if you move your stop a little too early, you're probably going to get tapped out, and that's okay. Okay. But you can see where this stop loss starts. Right, there's putting it back to previous structure, okay, or just putting it back 25 pips is on the other side of all these EMAs, right? Okay, and there is a support. Well, I mean, that support comes later, right? So you have a support line here, back to previous structure, right? You have opportunities to use any 3 of those places to put your stop, but you can see at 25 pips, this plays out, right? You get your 50 pretty quickly. Okay. So let's go take a look at all these and see how these stops would have worked out. Okay. As soon as so we'll get to questions after we get through all this stuff. I'm only going to do about another 2 minutes of this, but I just want to find some more signals, okay, to do the same with. And as you can see, almost all these signals you get to a break even. I can look at every signal, even if I was taking all the counter trend as well in here. Like, let's do these 4 signals in a row. Okay. We're not going to talk about the trend we're on, which would be even better, right? But 25 pip stop is actually all the way back down here. Okay, your 238 would be in the way, so it would have been a tough trade. But if you entered this buy, you could actually have your stop all the way up here. Look how tight that stop could have been on that 1 to 2. It's on the other side of the EMAs. You'd be coming back to this 238, so it would be a tough place to hold. It does eventually go, and of course, this falling back down here, and this other signal change is not the best, but you could be protected at 10, or you could have taken 20 to 25 pips. But look how tight that stop could have been, just following the signals. Right? I'm just going to show you how this works, because a lot of people don't believe that this stop loss works. And all it is just being a little bit tighter on your entries. Okay. This trade would have been very hard to enter because of the flash through. You probably would have had to have waited even for this pushback. But if you did get into this thing as it was coming, this cross, you probably would have ended up at the bottom. This trade actually probably could have been a loss. But even if you did this, right, you could have gotten to a break-even position, even if you went back to previous structure and your TP was here. Right, once it broke and flashed to the bottom, you could put your stop in at a break-even position. Right. This would have been a tough trade because it happened so quickly. Probably wouldn't even have been able to get into this trade because it just flashed down and then right back up. So it would have been a tough place to get into a trade. And something like this that happens just on our entries, being patient for like 2 or 3 minutes would show you that this entry right on the signal wasn't the best entry. Could have waited for this, waited to see if this was going to engulf and head back down after it got back to those EMAs. Okay, but then look at this long position as well as it breaks through this 238. Like, look at how tight your stop could be. Like, even back to previous structures, only 20 pips. Now there's only essentially 20 pips on the board. But even if you went back to the other side of the EMAs, your stop loss only 10 pips. Not even. You could essentially have a 7 pip stop on here. I mean, obviously we have some spread and stuff as well, which would be that's really, really tight. But do you see how these EMAs are playing as structure and as places for bounces? Right now, it's all these trades. This one would have been tough. Probably wouldn't have entered that, to be honest, because it moved so quick. But this, another one breaks through the EMAs. You're on a little blue candle. You want to wait, so maybe you wait that next couple candles out. Even all the way back here is only a 20 pip stop, right? And you have. No, that's 1-to-1, of course. But if you're using just the other side of the EMAs, you could have a 10 pip stop here. Right? We could just keep going. Now, this is I'm showing you these entries because a lot of people struggle with this 25 pip stop. They don't think it's possible. Look at this, back to structure. 16. 35 pips. Okay, as we just go through these trades, broke through all these, right? Your support, we've already showed this one, right? There's your 25 to 50. All right, even if you're taking these trades, which are counter at this point, but you took a red on a red candle, probably would have had to avoid this pull back out and it's heading back to the 238, but you could, right? The previous structure. There's a support line right there at 16, or you could have come back down to here and just had 25 pips. It's on the other side of those 2 EMAs. 50 would have been back to 238, but it did get to 30 and easily managed. If you're using this as your stop, easily managed to break even. Obviously, this would have had to be a little bit higher on a couple of engulf there. All right. Like, this 25 pip stop works. It works if you're tight and you're patient on your entries. It just showed you in the middle of the night when the volume is low, 1, 2, 3, 4, 5, 6 trades, that all would have went to a 20-ish to 30-ish TP with small, tight stop losses. Okay, and I wanted to show that because there's a lot of people who are like, that just doesn't work, that just doesn't work. And that's fine if you don't think that works. It does. It's going to get hit every once in a while, of course, because that's the name of the game in trading. We have to be able to take those losses as we move forward. Right? And that's okay, because that's part of the game. But if our losses are only 25 pips, like I said, 100 pips is kind of my cutoff, time where I'm like, okay, I've taken enough losses today. I don't get there very often, but I have 4 opportunities to join this market by the time I get to that. Okay. So I just wanted to show you guys that this works. This 25 pip stop works. And I could keep going through these signals, right? You can see, we can go through a whole bunch of them here. Right? Just looking at these, this one would have been a bit tough because of how fast that candle came, but you can just I'll keep going if you want. Like short position, 25 pip stop, 50 pip TP, all the way through the night when volume is low. Long position. Back to previous structure, which would have been the bottom of that candle, 25 pips. It's on the other side of both those EMAs. 50 pip TP. I'm telling you guys, you got to get confident with this indicator. Short position on the other side of the EMAs. Okay. This one would have been, even this one would have been tough trade to hold through, but flash to those EMAs a bunch of times. Look, 25, 50 pips. How about this buy? Everybody getting the picture here. 25 pips is on the other side of both those EMAs. 50 pip TP. Right? This sell would have been a loss. Trying to jump into that sell. Right? This buy. I mean, we could just do this all day. That's a tough position to enter. This probably would have tapped your stop right after. But there was 30 pips on the board. You should have been at a break-even position. Okay. 100%. And so Alyssa just said something. We're going to talk about this here. I'm going to talk about this before I stop recording. Okay. It works every time I'm patient. Every time I'm patient, wait for that signal, I wait for the look I want, it works. If I'm not patient and I try and jump in, and this is why, because it's about your entries. It's about when you're entering the market. Now, you talk about how you get into this market. Now, if you shift your entry 10 pips, that 25 pip stop loss isn't going to get hit. Now, if you're jumpy and you're not being patient, you're not going to be like, hey, this is where my stop loss would be. This is where I'm going to enter. This is where I'm comfortable. This is the risk I'm willing to take. It's on the other side of these EMAs and some structure. And the market has been going up. This is where I'm going to put it. If I'm going to be super patient and wait for that, it works. If you're not patient and you go and jump in that early, you need more space because you didn't be patient with your entry. Now that's maybe when you have to have a little bit of a lower lot size and you can have a 50 pip stop, right? Because you need that space because you weren't patient. And we like to use the word sniper, right? You didn't snipe that entry. If you're super patient and wait for that right entry, the 25 pip stop works. It works. Okay. And that also means your loss is smaller. And it took me a long time to figure out that worked, because there are going to be days where the 25 pip stop just seems like it gets tapped every time. Okay. But there are days where it doesn't even get touched. We just take a bunch of wins. Like I just went through, how many trades did I just go through? And this is going back and forth, counter and on trend, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades I just went through. Okay. I just went through 11 trades. 11 that a 25 pip stop loss would have worked on. 11. All and every single one of those entries, guess what they were? They were signals. They were just signals. We just said, okay, listen to what the indicator's telling us. Okay, listen to what the indicator's telling us. This one was a pullback, but listen to what the indicator's telling us. Listen to what the indicator's telling us. Listen, I'm a very intelligent person. Okay, toot my own horn or any of that stuff. But I'm not smarter than this algorithm. And I'm not smarter than this indicator. I don't know better. And to be honest, this indicator is mathematical. It doesn't lie. It doesn't second guess. It doesn't think, oh, maybe this works, or maybe this doesn't, or maybe I should wait this one out, or maybe I'm over my goal, or oh, crap, I took a couple losses. It doesn't think about any of that stuff. It just waits for parameters to get hit and it takes a trade. That's how you win in trading. You remove all those pieces that make you human. To be totally honest, we remove it. You just follow this mathematical equation. It removes the emotions. It removes the, right? It removes the, it's I mean, I don't want people to be less human. When it comes to trading, yes, because we need to be in a position to just be mathematical, because that's what trading is. Okay? That's what trading is. It's mathematical. And if we can follow the math, okay, if we can follow the math, we will win here, because it's a numbers game. In a 1 to 2 risk reward, this is all numbers. Okay? I'm going to stop recording here and then I'll go.